I worry that you're going to be in a position much like we were in 1929 into 1930s where, investors that are positioned and saying, I'm going to hold this for 10 or 15 years, they're going to find out that in 10 or 15 years, they're maybe just back to break even once we start to see the roll off and the catastrophic collapse of what the Fed has been doing.
This week's specials with Miles Franklin Precious Metal Investments. 2022 Gold Britannias for only $79 over spot. 2022 Silver Britannias for only $3.75 over spot. And 2021 Silver Philharmonics for only $3.75 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Gareth Soloway from InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
Thanks, Elijah. Thanks for having me back. It's great to be here.
It's great to have you. And what I wanted to discuss today is the positive news for both gold and silver. Gold is back above $1,800 and silver is around $2,450. Your perspective on why we're seeing this rally really this week, at the beginning of this week and last week.
Yeah, so I think it's a interesting thing for a lot of investors to view, because if you know the relationship generally that people expect, it's that when interest rates move up, you see gold actually go the opposite way. But if you look at where gold's been over the last month or two, as rates have gone from about 1.3 to 1.6, almost 1.7% on the 10-year, gold has actually held up beautifully well and is starting to creep up. The only sense that makes is that yields are starting to move up because of inflation, and then that is translating into a stronger gold price as well. So again, when yields move up because of inflation, gold actually gets a bid. You can see this going back to 1975 to 1985, where gold actually really outperformed in a high interest rate environment. So I think that's what's going on. I'm still looking for a potential inverse head and shoulder breakout on gold. I can show my chart real quick here to give everyone a little update on that. You have this shoulder, head, and shoulder. It's a long shoulder over here, but I love how we've held up so well over the last month or two here, and we're creeping towards this breakout trend line. If we can get a break above that on the GLD, this thing has 200 on the GLD written all over it, and that'll coincide with, I think, about 2100 on spot gold. So it's pretty exciting to kind of watch this play out in the near term.
Now, that 2100 number, when are you expecting that?
I was expecting into year end. It's getting close now, so I'm not sure if it'll be in the first quarter of 2022, but I still think it's sooner than later. I still think that we're going to hear more and more about how inflation is not transitory. It's going to last for many, many more years at an elevated level of 5% or greater. And I think, again, you're going to see a rotation into gold more and more. I also am watching Bitcoin. If Bitcoin has put in a top here with the latest all-time high, which we will discuss in a few minutes, I'm sure, then I think maybe if Bitcoin starts to fall back, you might see some money rotating into gold, and that could give gold an extra pop as well.
And as for silver, have there been any critical resistance levels that we broke through? I know the $24 level we broke through just last week.
Yeah, so there's actually some very interesting levels on silver here. I was relatively kind of bearish to neutral on silver until this latest run. And this latest run was powerful. We saw silver, which had looked like it was breaking down here and headed towards my ultimate target of around 18 or so on the SLV. It really turned around and ripped higher substantially. I mean, we went basically from this sub 20 level all the way to about 23, and we're pulling just a little bit off Friday's highs. But bottom line is, this price action is very bullish in the near term, and I'm still thinking that the longer term chart here is bullish. This is a beautiful bull flag longer term, and I still think you see $40 to $50 silver. It might take a year and a half, but I still think you have that upside potential. Absolutely.
So do you see downside potential in the short term?
Oh, man. So I did see it before this latest move, and this latest move to the upside clouds it just a little bit because you got back above some key resistance levels. So that is a positive factor. I'd like to see how it holds over the next week or two. Can it make a bull flag? Can it go sideways and consolidate? In which case that would be a bullish signal for silver, that it's kind of digesting this recent move. If it were to reverse over the next week or two and come right back in, then I still think that downside target could be hit.
For those who are kind of waiting on the sidelines, ready to jump in, do you think this is a good time or kind of wait for a pullback?
I'm always a fan of if something's had a big move, at least wait for a small pullback, whether it's consolidation where it just pulls back, couple percentage points, at least you're getting a slightly better entry. I never like chasing something. In this case, silver's rallied, well over 10% just in the last couple weeks, really. So, if you pulls back to where it's only been up 7% or so, something like that, I think that's kind of where you're looking for. I also think your time frame is very important. If you're someone who kind of has this long-term view on silver and you're saying, okay, 3 to 5 years out, I expect silver much, much higher, then this kind of nuanced down 10%, up 10% is really inconsequential to you with the potential upside. And I don't think you need to worry about that. If you're someone who's more of a trader, then yeah, sit on the sidelines. Let's watch to see what price pattern and time formation show themselves.
You mentioned the big news, Bitcoin making an all-time high. Your perspective on that, I know in the past you were looking for lower prices in Bitcoin. Is that still your view that we could see a further pullback?
Yeah, so the price action on Bitcoin has fascinated me over the last 3 weeks, especially just last week where we made that new all-time high. Now, you have to look at it in a perspective of, so my long-term views are Bitcoin's going to 100,000 to 500,000. It is going to be a major asset for the world in the next 10 years or so. But the question is, what's going on here? And last week, we saw the launching of the Bitcoin futures-backed ETF. And if you look to when the futures launched on Bitcoin a few years ago, there was a similar run-up into that launch, just like we saw into this ETF launch. And part of it's the hype, right? Part of it is people just clamoring. But the other question is do you see some underlying institutional pressure to push it up to get these long players long, these smaller investors on the longer side, only to dump it out after? Because in 2017, when they launched the futures, that's exactly what happened. You saw this big run up, and then we had this bear market in Bitcoin where it just collapsed. So that's really what I'm trying to figure out here. I do want to show this on the charts because it's fascinating. You pierced the all-time high on Bitcoin one day. Just one day. Now, there's something I use which is called the confirmation signal. The confirmation signal basically comes down to needing 2 consecutive higher closes on any asset to confirm. Now, the reason why you want that is because there's games that institutions play. All right, did they just run this up to keep the hype into the launch of the ETF? Now, remember, if you're launching a product, you don't want the underlying asset to dump out into the launch. You want it to be successful. So there's an incentive for the people that are launching this ETF to pump it into the launch. And then once it's launched and had a week or two of upside, you can kind of let it go down and, okay, it was still a great launch of the ETF. So that's the question. We didn't confirm above this top. We only got one close before you got a reversal candle here. So it kind of creates a situation where you might actually have a double top here, and that could be a little bit bearish. Now, if we go up again in the next few days and confirm above it, well, then I think you have upside to 70,000, maybe 75,000 in the near term. But without confirmation, I have to be a skeptic here, knowing the volume in Bitcoin has been light, knowing the institutional pressure into the ETF launch, and just knowing the overall sentiment. The sentiment right now is unbelievably bullish in Bitcoin, and that concerns me as an investor, where people are saying, oh, it's going to 100,000 by year end and then 500,000 next year. These calls are getting a little too outdone, and usually that's sign of irrational exuberance. So for me, I'm just going to try to focus purely on the chart and let the chart tell me, does it confirm above or does it not? Now, in all fairness, I am short Bitcoin right now. I utilized that pierce to short it, so I'm short at 6,600 and 66,100. I'm in the money right now, a little over $3,000 to the downside, but I still think there's a potential for more downside, and therefore I am holding my short on Bitcoin, at least in the near term.
Now, essentially what you're saying, though, is that you're really looking for that second confirmation of the new high before you'd become bullish again.
Yeah, so that's exactly. You want to close above that line again, and then you need another day where it closes above the high of that first day. And the reason why I look for that is because there's a tendency for manipulation to occur, and this occurs in stocks, commodities, so many different things where the institutions, they know they can trigger max greed by closing something above a level, where the max amount of people will jump in thinking it's a breakout. I mean, how many times have we seen charts do that and then they reverse and everyone's left holding the bag saying, but I thought it broke out. And instead it reverses and they take losses. So that second close above historically has told us that it's not a game by the institutions, that there's some legitimacy behind it. In other words, it's not a fake out breakout.
No, we've seen a similar thing happening with the stock market recently. It looked like the stock market was going to roll over, but now we're making all-time highs again. Your take on where we stand right now?
So that's exactly right. So I'm looking at that same kind of thing on the S&P chart here. The SPY, for instance, is just peaking above the previous high on the SPY chart. And let me zoom in on my chart here. And what you can see is we're going to look for that same signal. And this signal is beautiful because it's universal. It can be used for breakdowns. It can be used for breakouts. So notice this trend line here, how it slopes, and we kissed it right here. And now you're hitting it again, plus the double top, and we are above. Do we confirm tomorrow in the S&P? That would be interesting to me. That would show me that there's more potential legs to the upside in the S&P. Right now, I'm kind of in a wait and see attitude. We have lower lows, but now we have a higher high. So I think the last time I was on, we had finally made a lower low and a lower high, which had, to me, changed the trajectory of the market to a more bearish tone. We now have still lower lows, but we have a higher high. So you take the positive and the negative, and they cancel each other out. So as a trader, I have to be more in a neutral stance until I get more information in the near term. Now, one thing to note here is that the NASDAQ 100 still has not come back to those recent highs. And you could look at this and say, okay, well, how does this make sense? And it makes sense if you think about what stocks are inside of the S&P and the Dow, which are making new highs, versus the NASDAQ. So the NASDAQ is tech-heavy stocks. You know, we know that Snapchat warned. We've seen yields moving up, which is usually negative for technology stocks, but it's positive for dividend-paying stocks that make up a large part of the S&P as well as the Dow. So it seems like there's this money rotation going on where people are moving a little bit away from technology, positioning themselves for higher interest rates in the future.
Now, you mentioned earlier that people are expecting inflation, right? And that's why even as rates are rising, precious metals are rising. If we look at what's happening at the Fed, the Fed is kind of realizing, inflation might not just be transitory, and it looks like they're going to start tapering possibly in November. Your perspective on how that is all going to impact the markets. Has this all just been priced in that, the markets are now expecting a taper? Your perspective.
Yeah, so this is the big question, right? Because I still vividly remember 2018 where the Fed started to kind of tighten and the markets dropped 20% in 6 weeks. Here we have a scenario where they've choreographed it and kind of alerted the markets much earlier on that this was going to happen. And I think they're going to look to do very, very tiny amounts, meaning like, right now they're printing and pushing 120 billion into the system every month. They're going to look to just take off 10 billion a month or so to make sure that it's not a pain situation for the stock market. The question I have is, as you suck out liquidity from the market, is it inevitable that we're still going to just turn back down? Even if the Fed is trying to do it very, very slowly. So it might be a slower reaction, but I'm still in the camp that, we know that the expansionary money supply and the way the Federal Reserve had pumped money into the system helped the market achieve the current highs. It only makes sense that as you draw that out over time, it's going to pull it back. My one thing I will say is that at some point, the markets are going to freak out, whether it's because of the Fed pulling back on monetary policy or because of an external kind of black swan event. And then the question I have is, do they take away a few billion, 10, $20 billion, and then all of a sudden we have a freak out and they pump it right back into the system? Because historically, if you look at where interest rates were, every time we have a catastrophic event, interest rates would drop. And this goes back to 1977 when the dual mandate was created. And then the Fed would kind of raise interest rates back. And then another situation would happen. They would never get back to where they were prior. And then we'd go even lower. So there's been a history where they've never been able to fully exit the kind of the easy money policy. And I'm very doubtful that they'll really ever get to zero quantitative easing, let alone interest rates going up again.
And how is that going to impact inflation? Because at first the Fed was talking about it being transitory, and now it seems like they're having doubts about that. Your perspective on inflation going forward?
Yeah, and I still remember, 6 months ago doing an interview with you where I said that. I said the Fed's saying this, there's no way it's going to be transitory. Because again, when you have stores that can't find workers and they have to double the pay from $10 an hour to $20 an hour and then figure out how to pass those costs through, you can't raise the price of a Subway sandwich by $10 overnight, or you're not going to get anyone to buy. So they have to do it very incrementally, and which means it's going to be a longer term process of inflation. It's going to be quite the issue here. I don't know how the Fed gets out of this ridiculous spot where the markets are going to freak out if they raise interest rates, but then inflation is going to keep high if they don't raise interest rates. I mean, where do they come out? Are they willing to punish the markets to get inflation under control, or are they going to just let inflation run willy-nilly and just let the markets do whatever they want to keep the markets up? I honestly don't know. It's one of these conundrums that is going to be fascinating to watch. I encourage people to be more of a swing trader in this environment, because you're going to get more and more whippy moves where you drop 10%, rally 8%, drop 20, rally 12. And those type of atmospheres are great for swing traders and day traders.
Do you see that investments such as stocks and bonds right now are good for anything besides just trading at the moment? Do you think it's hold for the long-term approach now, or is that approach is not applicable at this point?
So I worry that you're going to be in a position much like we were in 1929 into 1930s, where investors that are positioned and saying I'm going to hold this for 10 or 15 years, they're going to find out that in 10 or 15 years, they're maybe just back to break even once we start to see the roll off and the catastrophic collapse of what the Fed has been doing. So I encourage people to kind of look for other ways to invest. I think gold and silver are great ways. I think if Bitcoin ever pulls back to a decent level, I think that's a great way to look at investing and diversifying. And I think in the stock market, there are going to be places to go. Like potentially, we'd have to look at what China stocks are doing at that point. But there are other places to invest where you're not as exposed to the high PE multiples that a lot of these stocks have taken on at this point. I mean, just even looking at Costco recently, Costco trading at like a 35 PE. And you look at Costco, and yeah, it's a great company, but should it be valued at a technology valuation PE ratio? I don't know. To me, it shouldn't be, and that's where we are at this point. So valuations, especially in a lot of U.S. stocks, are nutty. I think some of the Chinese stocks, if they can get through this regulatory period, are looking better. I think recently in the last few interviews, I've talked about my investments in China stocks. Alibaba has had a tremendous move up, and even now it's priced at like half of the valuation of an Amazon, which makes it very attractive still for me.
All right. Well, Gareth Soloway, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
Yeah, I think let's keep an eye, number one, on Bitcoin here. Does it get back above that 65,000 previous high? If it does it confirm? Confirmation is one of the principles I live by now. It's become so important that all my traders follow it on a daily basis on different charts. So watch for that. If it can't confirm, then I think you have to favor a pullback maybe to 57.5, maybe as low as 54,000 on that. And then with the market, same thing. The S&P is at a key pivotal level here. Does it break out? Does it confirm? Or do we start to see a pullback again? And again, we're coming into the last portion of the year. Everyone expects it to be great. But remember, in 2018, 20% downside from November to December when the Fed began to taper, and they're on the verge of doing that again. If you want to follow me, simply come to Twitter, and my handle is @GarethSoloway. Great place to follow me.
All right. Once again, Gareth, thank you so much for your time, and God bless.
Hey, you too. Thank you so much.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.